So hello and welcome to this Books Crypto Club weekly catch-up on Zoom. We meet up every week and we record the session. So if you enjoy this, do click on the subscribe button, click on that like or the notify button, as well as the YouTubers say. And this week we're going to be talking about whatever we end up talking about. Let's see who's going to join us today. Chris, good afternoon.
Good afternoon to you, Gary.
How are you keeping?
Yeah, it's fine. It's just sitting, holding, and waiting for the ups and downs to correct themselves.
Yeah, well, there's been plenty of those this week, hasn't there?
Well, yes, it's still going down. It hasn't bottomed yet, but there's enough rubbish on the market that it's dragging the good stuff down with all the the jokers.
I think that's often the problem, working out which are the ones to go for and what's really happening, and are we at the bottom and all this kind of stuff. So we'll see what other people think today as they come and join us.
I think it's just that there have been far too many joke rubbish coins out there making far too much money, and it's just having a rather poor reflection. I know the Chinese are causing problems and nobody likes it at the moment, but times change.
Yeah, well, we'll see how it goes on. Hey, welcome to Mark and to Matt. Hey, Mark. Hey, Matt.
Hello. Hey, Gary.
Good to see you both. So we were just talking with Chris about this week's been a pretty frantic week in the world of crypto. So I don't think my phone alerting mechanism has stopped pinging.
Yeah.
Every time it's like ADA's up 5%, ADA's down 5%, Bitcoin's up 5%, Bitcoin's down, kind of thing. So Matt, just by way of introduction, because though this is the first time you've been along to one of these sessions, these are pretty open, free format. We don't kind of have an agenda or anything. We may have some more people joining us, we may not. We'll see how we go on. But that's why I record the sessions now as well, and we put them up on YouTube. And seems to be a growing number of people who seem to watch them afterwards, so there's certainly some value in it. Got typically a range of people with experiences from, complete novice through to reasonably knowledgeable thing. I don't think there's any real experts in crypto land. It's just varying degrees type thing. But I know
what would that even mean these days? What is an expert in crypto?
No, this is it's like someone sent a tweet earlier on. A guy I know from insurance, and he's doing it's a company called Nexus Mutual, who are a crypto insurance company that they're one of the first ones. Really cool, great thing. And he said something about needing to think longer term. And I sent a tweet back earlier on to say, yeah, but in startup land, longer term means within a year. And in crypto land, it probably means within a month. So the whole time scale is free. But are you fairly fresh into this? Because I know your background is traditional investments and that. Tell us a bit more about yourself.
Yeah, so just by quick way of background. So I've been in the quantitative systematic trading space, mostly for equities, some futures, for about the past 20 years. Most recently in Morgan Stanley here in London. But I went to Morgan Stanley after about 10 years on the buy side with a number of hedge funds, and then going back to the sell side with Morgan Stanley was very tough. I didn't enjoy it at all. So I left in March. I was trying to decide what I was going to do. So I've ultimately decided I've set up a company. I'm not going to be involved now in the crypto blockchain space, but the focus of the company is to help investment firms modernize their investment processes and their data strategy. But I do have one foot in the blockchain space. It's an area that I'm fascinated with. I think it represents the future of finance. I'm going to become an advisor for a blockchain company in Europe, and I want to get very, very deep in that space. And the cryptocurrency side is it's been more of a passive kind of fascination with just what's been going on, because it's such a unique, I guess a unique asset, if you want to call it, unique market, and it represents a lot of things that are missing from traditional financial markets. but it's equally, it's also driven by factors that are unique to the crypto space. It's, I think, one of the few instruments that you can trade that is driven almost purely by sentiment and speculation. As opposed to, which makes it very, very unique. So obviously all financial instruments have some element of those, but this market is only that for the most part.
It's pure sentiment. This is the thing, I see Mark nodding on this as well, and Chris. I always say that fundamental analysis in crypto doesn't work because there isn't actually any fundamentals behind it, but technical analysis works, but for a reason different to how it works in the financial sector. In the financial sector, technical analysis works because you're still looking at some of the behaviors of the business and that kind of thing. Whereas in crypto land, you're using it to predict what everyone else is thinking. And it's purely a sentiment thing, as you say, so.
Yeah, I would almost argue that it is the perfect market for technical analysis, because my view is, and I was a big market technician early on. I spent a long time kind of reading books, many books about technical analysis. I was kind of infatuated with it. But I think one of the big drivers of technical analysis and why it kind of works sometimes is due to the human emotional psychological effect. Whereas if you have, if you have a traditional equity or a stock company, it will be driven, again, by a combination of changes in projected future earnings growth, future cash flows, and that will, like Warren Buffett says, in the short run, markets are a voting machine. In the long run, they're a weighing machine. So you have this fundamental undercurrent that pins it to some kind of price. But in crypto, it's just purely, sentiment and emotion based, which I think is perfect for technical analysis. Although, to be honest, I haven't really looked at it in that context.
It's kind of interesting though as well. You get people who are, they've got like a quant background, something, whether it's on FX trading or commodities, and they try and apply that knowledge to crypto world. And it works for a while until it doesn't. And when it doesn't, they usually go bust. They go down the margin call. So, sorry, I see we've got a couple of new people joining us. We've got Peter and Derek and Anish. Anish is back as well. Hey, Anish.
Hello.
If anyone wants to know anything about cryptography as opposed to cryptocurrency, Anish is the guy, but he does a lot of stuff around tokenomics as well, if I remember correctly. But okay, Peter, you joined us as well this evening or today?
Yeah, thanks for sending around the invite as always. I'm normally busy at this time, but I should have time for the first half an hour, 40 minutes.
Cool, excellent. And is it Derek? Yeah, but I've got a small screen here, so I'm kind of scrabbling to see. Derek, welcome aboard.
Hi, yeah, thanks.
No problem. I was saying to Matt, who's first visitor on this as well, we have a very open format on these sessions. We tend not to have an agenda or a structure or anything. So quite happy to discuss anything in particular. If anyone wants to ask any questions or share anything, you find usually Mark's really good in terms of he monitors what's going on in the market. So I tend to use him as my go-to guy on that. Chris is always watching for what's going up and down and sideways. So I don't know, anyone got anything they want to share for this week? This is where it always goes silent, and I edit that bit out afterwards because I record this kind of thing. So Darren, tell us a bit more about yourself. Sorry, Derek, tell us a bit more about yourself.
Oh, sorry. Yeah, hi everyone. I've been involved in the crypto markets and blockchain application development now for about 4 years. I'm not a coder. I'm more on the commercial side of things.
Okay.
Always interested in all my career. I've been interested in competitive markets and latest software technologies. So
excellent.
Blockchain technology and its killer app, cryptocurrencies, has certainly caught my attention. And more recently, just everything going on in the DeFi space, particularly with the liquidity yield farming. I'm
seeing real growth in that. The local crypto club I run, I keep trying to share any things about DeFi and any learner's guide and that kind of thing. There's a lot of stuff going on. Oh, cool. That's great. Peter, can you share something about yourself with us tonight?
Yeah, so I'm CEO of our capital. We're well, DLT and Crypto Fund of Funds based in London. Started up in 2018, launched May 2020, so got the timing of the market pretty well there. I mean, that's the long and short of it anyway.
Okay. Well, with it being a fund of funds, how does that figure with the FCA regulation around crypto assets and derivatives and that kind of thing? Is that a problem for you?
No. So as we only invest in funds, we're going to set up as a traditional alternative investment fund in Europe.
Okay.
And as the underlying funds that kind of do the kind of other crypto related stuff, we just pick managers globally.
Okay. I ask simply because I know there's a few firms who are coming into this space and they're beginning to use tokens to like glue together different cryptos and that kind of thing. And as soon as you do that, it falls foul of the FCA regulation. So it can just be a bit problematic. So that's good. Sounds like if you're doing the more traditional stuff, it's less of an issue then. So that's good. So is anyone watching what's going on with Ripple this week? Any news? No, there's court action going through. I know we quite often have Hussein on. Hussein was working for Ziglu. He was their CTO until a few days ago. And he's been dialing into the Ripple SEC court case because you can actually dial in, you can listen in, that kind of thing. So we'll see if he shows up later and he can share any other news on it. So we'll go back. Matt, you were talking about you're learning in the kind of like the crypto space now from the traditional equity thing. What's your experience to date? Is it just a crazy land we're all in?
Like I said, it's been kind of this bemused spectator, I think, approach. You know, I've been watching it for years, just, you know, in the more in the popular press. There's a bit of a funny story from my former COO when I was at a fund in the States. He bought about, I don't know, maybe $8,000 worth of Bitcoin. I think it was October 2017, around he bought it was around $5,000 at that point. And then, you know, as everybody knows, it shot up. And I think about 2 months later, he went to log into his account and it was frozen. He couldn't access it and he didn't know what was going on. He contacted I don't know if it was Coinbase or one of these. And they said, oh, well, your account has been hacked and we have to do an investigation. And it took 3 months before he was able to get access again. So what happened is hackers got into his account, sold his Bitcoin at $15,000. And tried to wire the money out. They couldn't wire the money out, and they froze the account. And in the end, and they finally unfroze it. And in the end, the hackers did him a huge favor because the price had fallen back down to like $5,000. So that was kind of my closest experience to crypto, and I never opened an account or did anything. I just kind of watched it from the sidelines. And obviously, this year it's just gone, you know, gone white hot. And my interest is more on the blockchain side, but obviously, crypto I think is the world's kind of it's the introduction to blockchain. I'm not sure if crypto is doing a service or a disservice to the blockchain movement at the moment, but nevertheless, I think obviously very entwined.
Yeah, if I may add, so I am a very old hat in this thing.
Yeah.
So Gary was mentioning Ripple, so I was an early advisor to Ripple from October 17, 2013 until Stefan left. So I would keep my mouth shut about anything about Ripple. Again, Ethereum, I'm one of the original reviewers of the orange paper. So if you know Ethereum has 3 pieces, and third is the orange, and I'm one of the original reviewers. So you can find my name on the front page. So
nice.
You can verify me straight out.
Yeah.
And you find my talks. Yeah. So my take on this, and I've done like 20 years in cryptography, and Gary was making fun of me for that. So my take on this is like, we need to have a mechanism design in creative mechanisms. Mechanism designs are only possible when you can actually do incentive alignment. When you do incentive alignment, you need to have some economic value. So in one sense, taking out the so-called crypto out of blockchain is going to be difficult. What I mean by that is like, if you have a protocol, the security margin or the cryptoeconomic security margin of the protocol is a function of whatever value you lock in. Otherwise, you know, in a public blockchain especially, right? There is no incentive for anybody to provide you with security. So this is something that we need to understand. We can't have blockchain in a public world where nobody trusts anybody else without having some upside that you are providing people, so they're incentivized to collaborate. That's something I wanted to make sure, you know, it's understood.
So it's probably, to put that a slightly different way, because my background is blockchain, and then kind of stumbled into cryptocurrency through necessary evil type thing, is that ultimately cryptocurrency is the mechanism by which you secure an open blockchain. And so it's one of those things you kind of get as a bystander type thing, but people have become very excited by cryptocurrency in its own right. And I agree with Matt. You know, my background, I was really interested in blockchain and what it could do as a ledger of trust and programmability and all this kind of thing, and what change it could do to businesses and supply chain and all this. And then you get cryptocurrency comes along, and it kind of, you know, as Chris was saying before at the beginning of the call, you get all these crazy coins coming out. It gives bad publicity. You get these stories of how it's melting the glaciers and the polar bears are going to have nowhere to live. It's all used for money laundering, and it's dreadful type stuff. Ultimately, though, what I find with the whole cryptocurrency space, and particularly with the volatility of prices, it's at least raising the visibility of it, and it's making people more aware. So when I say now, oh, you know, I work in blockchain, and people say, oh, what's that? So it's the technology that sits underneath crypto. And they go, oh, right, okay. And they instantly lose interest, and they start asking me whether I should buy Bitcoin Cash or Ethereum type thing. But so I think the crypto craziness in some ways is good, because it's increasing visibility, even if it's increasing it for the wrong reasons. I'm trying to remember, who was it who said there's no such thing as bad publicity, which I think was disproved by Gerald Ratner a few years ago when he said about the quality of the stuff they sold. So I think there's room for both on that kind of thing. So, Mark, you're usually looking at what's going on in the market and everything. Share with us anything of interest this week?
It's been a pretty hard week, hasn't it? So it's really hard to say other than it went down, other than what's happened in the market. Yeah, it's quite interesting how quickly it tumbled. Yeah, and how much it tumbled. Yeah,
tumbling, I think is the.
Yeah, I was about to say something which I thought was interesting.
We're about to break 1800, so.
Yeah, I think the key thing I wanted to say was, like, my expectation was like there'll be a systemic failure that can happen, because if you look at all the DeFi protocols, they're stacked one on top of the other. So last time something like this happened, a bunch of stability coins, they couldn't really handle it. So if you recognize the mechanisms behind stable coins, it's like they need to work fast enough. When you have congestion happens, they can't fix it. So they became in an unstable state, and they need to really fix fast. And if you have like a whole chain of these events happening, and if somebody really manages to find a flash attack on this, like, you could really tip the thing. And I didn't see no flash attacks. I think everybody's, you know, hitting bricks, right? And two, there's a lessons learned from the last meltdown. So I saw no DeFi protocol. The points of congestion that really, you know, struggled to cope with the kind of throughput was the centralized exchanges rather than the decentralized exchanges. So that to me was a very interesting observation. And going back to Mark, what you were saying, literally tumbling. Look, you know, let's be very honest, right? You know, when Elon says, okay, you know, assume Elon is being one of the smartest people on earth. I'm not going to, you know, refer to Charlie Munger's comment on him, okay? So that's a separate question. You can Google Charlie Munger's comment on Elon, and you will understand what that means, okay? But even if he were, the time it takes for somebody to actually get on board all these things, and I would refer to Vitalik having similar comments, it's very unlikely he has reached a point where he understands all the pieces, right? So he makes some comments, and that reflects, not in a very good sense for a lot of the ecosystem, right? And that kind of got a wrong kind of attention. And say for example, people on this call, a few of us have like very good traditional financial engineering background, right? A lot of us have traditional retail banking, consulting, and doing strategy for hedge funds, but not like a financial engineering kind of thing. And effectively what has happened is like there is this financial engineering expertise with a large amount of capital looking for markets where they can actually move the needle, and SEC doesn't go after them. And that to me is a very, very, very dangerous place to be. And I think, any market that moves, if you're a trader, you make money. A stable market is a market that's a bad market for them. A market that's going down is a very good one. You can short and make money. A market that's going up, bull, is very good for everybody. Everybody's a genius when the market is going on bull, okay? So my observation, having observed people moving BTC around, is it seems like, there have been some parties who kind of saw what is coming and, take it for what it is.
It's a good point, but it's interesting as well as to where some of this has been going of late. I was in a LinkedIn conversation the other day with a guy, Anthony Day, who's IBM, and I think he's the blockchain lead these days, and he made a posting about the latest crash in crypto, and I called him to account on it and said, "Oh, did the Bitcoin blockchain fall over? Or the Ethereum blockchain fall over or something?" It's like, oh, do you mean that prices just went down? Because coming back to your point, Anish, the infrastructure, the hardware, the blockchain, all of that continued. It was completely resilient. It did not fail. And that actually shows that this as a platform, as a capability, as a concept, is actually pretty robust. Now, the only reason I started hearing this week about the kind of like the crazy prices was when people started sending me messages to say, I can't get onto Binance, I can't get onto Kraken. It's as someone was saying, it's all centralized exchanges that are having problems at the moment. And that's where I'm not sure if decentralized exchanges will solve that, because my experience is that decentralized exchanges are even less performance capable.
Yeah, I mean, decentralized exchanges, by the fact that they are decentralized, their throughput will be much less. They are on layer 1, layer 2. There are some improvements that's happening. So, say if you look at Loopring and Diversify, Loopring is actually using Groth 16 and hardware acceleration. So essentially, they use the thing that I'm interested in, zero-knowledge proof system. So effectively, they're using zero-knowledge ZK rollups to actually do some increased throughput. But, irrespective of that, the problem with DEX is DEX actually has to have the whole execution happen on chain in whichever L1, L2, it doesn't matter, right? Whereas what an exchange does is like it's a massive database in that sense. You take everything offline, do all the transaction, then reconcile onto back to the blockchain. So you can have queues on both ends. But so in theory they could be really, really fast, and they also can do OTCs, right? Mm-hmm. So given all of that you could do things that's completely out of sync with the blockchain.
Yeah, it's probably a good point, actually. Matt, I don't know how familiar you are yet with concepts like on-chain and off-chain. You'll hear more and more about layer 2 solutions right now. Is that something that you're familiar with at this stage?
No, actually, I was going to ask this. Your comment about the blockchain, I guess the infrastructure doing just fine during this. Is there theoretically a point where the blockchain itself can be compromised or not work? Or does it just slow down?
Well, it depends which blockchain you're talking about to begin with. So there are many blockchains and they all are designed slightly differently. But if we just talk about two of the major ones, which are probably Bitcoin and Ethereum, because both of them are proof of work, which means they've got all these miners doing complex computations, which is what's causing the polar ice caps to melt and all this bad stuff that the traditional finance people tell you about. With both of those, that they've got a methodology whereby this mining process creates a block every X minutes. And in Bitcoin's case, it's every 10 minutes. and it's a 1 megabyte block, if I remember correctly. So it'll allow for about 2,000 transactions. So that's not very many. If you think about Visa and MasterCard, you're talking about, I think the max throughput is 15 to 20,000 transactions a second. So you couldn't just transfer that onto Bitcoin. You just have a backlog building up. But with Bitcoin,
MasterCard is actually kind of a payment aggregator related to like Lightning, and the actual kind of transactions themselves are kind of well settled on a kind of gross real-time settlement system.
Yeah, it's a state channel essentially. So essentially, you have a forward commit and a reveal. So Matt, I can hand wave if you're really keen, and I can explain the whole whole gamut. So there are a 2x2 matrix, right? So you have the key principle we have behind blockchain, and as you probably recognize, is you need to have access to the data to verify that, right? So there's data and then the logic of verification. So you can have data on one layer and you can have verification on the same layer, or you can have data in another layer, you can have verification on another layer. There's a 2x2 in that sense. So effectively what happens is mostly if you think about, I mean, I'll talk more about Ethereum because, I have not done anything significant on BTC. So I am not either way, I'm not a BTC maximalist. I am not an Ethereum maximalist. I am not a Ripple maximalist. I've worked on Ripple and Ethereum and a bunch of other protocols. So I can say with certainty what is in there with as much as authority as anybody else. So I can explain in great detail. So imagine Ethereum, right? So, okay, I'll start with Lightning because somebody meant Lightning. So I know the guy who proposed the thing, and like he works in MIT. So effectively what is happening is trivial. So imagine we have our chain and we want to do a transaction between all of us, say, starting with Peter through, Matt, through Chris to Gary, right? So, you are actually doing a transaction where the money goes from Peter to Gary. So the thing is just to make sure that, nobody in this chain can actually take the money and run away. You could actually do in a commit reveal mechanism. The commit reveal mechanism, the simplest way I would describe it is like US dollars are the best thing. I'm going to give you an example. So it kind of makes intuitive sense. So if you take a US dollar note, if you tear it and you stick it back, it's still valid. Okay. So the commit thing I describe is like, imagine you are in a place and you want to go somewhere and you ask a friend to give a ride. Imagine, I don't drive, so I can't give you a ride, but imagine I could drive and I could give you a ride. And we agree that you give me $100. Just, it's an imaginary world, right? We could make it. So I agree. So what you do is to show your commitment, you take a 100 note, tear it, and give me. Okay. So now that's commit. Now the reveal bet is the other half that you have. Just for me, with one half of the US dollar, it's absolutely useless, right? I need to have both of them, right? Assuming, I am a non-violent man. I'm just making this up, right? I don't have a gun. So, now I drive you to the place that you need to get to. When you get out, you go, Anish, okay, thank you very much. Here's the other half. That's the reveal. So then I have the full $100 US, right? This is the same mechanism we use to do state channels. So, you do a transfer across, transfer the pattern across from Peter through you to Chris to Gary. And you could actually do, every time you do the transfer, you give the half of this thing, right? So from Peter to Gary, there is one transaction that's going through where you agree. Okay, when you, take Matt to Gary's place, you get the money. Let's imagine that, right? So, you give like a half the money, and then when you get to Gary, you get the other half in an imaginary world. You put the two together, you get the $100 deal done, right? So this is what a state channel means. So effectively, the good part about this is like the transaction get rolled up. On the main chain, there's only one transaction, right? Only, and the thing is like, assuming this is optimistic that everything went according to plan. If something didn't go according to plan, then all the transactions get unraveled, and you will have to use the consensus on the blockchain to say, oh, did Matt give the thing? Yes. Did Chris not give Matt the thing he's supposed to get? Yes or no. All of that will happen on the blockchain, right? This is the state channel. Then one thing below is called level 2. Okay, level 2 is like you take transactions and you bundle them. So you can have side chains. So a side chain will be like a blockchain that's attached to the main chain. Okay, so it is like a normal blockchain attached to the sidechain. So if I were to give you an example, but this is a bad example, Polygon, right? Let's take XDAI. XDAI is a better one because Polygon has 2 choices, and 2 choices can cause confusion. So what happens in XDAI is they have a sidechain and they have a proof of stake. Proof of stake is quite simple. As it states, like, when you want to make a decision, you need to stake some money. It's like taking a bet, right? If you lose the bet, you will lose the money. So same thing applies in consensus. Simple way of thinking, right? So XDAI actually takes the transactions from Ethereum, bundles it up, and then puts it back in. So you can actually bundle a whole bunch of transactions. So one transaction on main chain could be 1,000 transactions on this side. So you get a scaling up factor, right? And then there's the thing called optimistic rollup. Optimistic rollup is like you take transactions and you assume these transactions are all going to be valid, okay? And then you have this concept called fraud proof. You suspect somebody has done a fraud, okay? This is plasma, okay? And that's that. And then I'm going to talk about the magical one. The magical one is a zero-knowledge proof. Do you know about zero-knowledge proofs?
We're probably getting a bit too advanced for this for tonight, actually.
Okay, all right, then I'll keep quiet then.
I was going to offer a slightly different way of describing it for a minute, and as you can pull me up if this is completely wrong. I'm going to go completely away from technology and say, look, the COVID restrictions are all over. We all go out for a night out to the pub. Okay, so we're all in the pub and we're all ordering our drinks. Layer 1, traditional blockchain, is each of us goes to the bar, orders our drink, pays for the drink, comes back to catch up with everybody else. So there's a whole load of single transactions going on there, and it's committing at each point that we're handing over to cash. Layer 2 is we say, look, I really can't be bothered with going to the bar each and every time I want to order a drink. Why don't we just pool our cash together for a while, and we'll use it. In England, it's called a kitty, and it's just a bundle of cash that we all keep together, and we all agree on the round of drinks. We take money out of the kitty, and then we settle up at the end of the night with the pub. So there's just now one transaction with the pub, which is how much do we owe, and here's the full amount for it, as opposed to a single transaction for every single drink type thing. So as you can imagine, that involves far fewer transactions with the barman. And so you're not constantly going up to the bar, coming back, waiting for the queue. One of the things I hate about bars is, hello, barman, I'm over here waving my cash, or all that kind of goes away. And is that close enough?
That's an optimistic rollup.
Okay. Well, it shows you'll hear layer 1 is where you deal with each transaction as you go along. Layer 2 is where you actually do a load of those transactions away from the main blockchain, and you effectively net it all out and then settle up at the end of the night type thing. And the cool thing with things like Lightning and other layer 2 things is effectively the agreement that you have as a group of people with that kitty is that at any point any of you want to settle up, then it's whatever is in the kitty is the right division at the time type thing. So, Matt and I, if we had a kitty between us, which is actually how much I owe Matt or how much Matt owes me, then at the beginning of the night, we agree we're both putting £5 each in, but at any point, if one of us wants to leave, it's whatever the net amount outstanding is what gets settled. Does that make sense?
Yeah, I mean, there are a few bunch of caveats, very important ones. I shall keep quiet because okay. As long as everybody understands what is what, because each of the small caveats have enormous differences on what happens next. So caveats are important, but as long as people get what it is, it's good enough. And as long as you're happy, I'm happy.
I think if we stick at the concepts and principles level rather than the actually drilling down, because we can get a little bit too much in the weeds at times, I think. But Matt, was that understandable?
Yeah, no, that makes sense. I think in some ways that's a parallel to if you think about money transfer. You've got the normal SWIFT transfer.
Yeah. You do reconciliation, daily reconciliation, log-based reconciliation, essentially. Yeah.
TransferWise is the other, is level 2.
Yep. So it's kind of like a real-time gross settlements versus netting out straight away. Yep. Absolutely on that.
So where's Ethereum 2.0 with their layer 2 solution? How's it progressing? What's the latest?
Are we talking about EIP, is it 1599 going live in July?
1559.
1559.
So, okay, I can give you, I mean, if you are interested, I would really recommend, there's a paper written by Tim Roughgarden. He's an algorithmic game theorist. He has done some very interesting work on mechanism design. Either listen to the podcast on Epicenter or read the paper. Either one is good. Okay, so key things. You asked the question, Derek, how are we doing with, things? Sharding, VDF. Some open problems are there. I don't think everything will be solved like instantaneously. It'll be, next 6 to 12 months, things will move. And by some of the, most of the things are fixed, right? I would say most of the things are fixed. And so this is why I said, the nuances are the key, because even though some tiny things are outstanding, that can cause a lot of problems on the long run. So EIP 1559 was, looking at one of these tiny problems. So whenever we do any transactions in Ethereum, you have to pay gas, okay? And the thing with gas is initially, okay, let me explain why we need to pay gas. You can do a denial of service, right? You can just fill up the whole place with people who are not willing to pay any money, right? It's if it's a pub, imagine a whole bunch of people walk in and they don't buy a single drinks. That's denial of service on a pub, okay? So the pub landlord says to everybody, anybody who walks into the door has to buy a drink, okay? And this, you can think of it as gas. And what has actually happened is nobody regulated how this is going to be. So the pub landlord has the random ability to put this up, right? And so when there are a lot of people queuing up outside, the pricing becomes a massive discrepancy. So this needs to be fixed, as in random, arbitrary, rent-seeking mechanism of the pub landlords have to be regulated. So the governments of the world put their foot down and said, okay, you know what? You should look at the queue, look at how much people are willing to pay. The best variation should be up to 1.5, okay? 1.5 times whatever the average person is willing to pay. And that is literally what it is. So efficiency in mining, taking away their arbitrary random ability, the pub landlords to charge people gas, and some other minor tweaks. I won't go into details.
But I thought wasn't part of that EIP was to introduce proof of stake, which had a dramatic impact? No? Okay.
No. It hasn't really. So if you want to do a real shift from proof of stake to proof of work to proof of stake, you have to have a major fork, right? So, and everything else has to happen. So that is kind of in at 2.0. So all the crap is waiting there. Sorry,
okay.
Apologies. And yeah, go ahead.
Oh, I was going to say, because picking up on Derek's point of what one of the things going to happen, because I know Vitalik Buterin's been saying for, I think it's probably 2 years now, that proof of stake is nearly here. And it's interesting, we're talking about the speed of what we mean by long-term in the crypto world before. Long-term in crypto world usually means days or weeks, except for when we say nearly here, which usually means several years. Because I still haven't seen anything. Mark, were you going to say something?
Yeah, I was going to ask Anish, there's something that you mentioned about the transaction fees on gas. You said it would be roughly 1.5 of what an average person would be willing to pay, right?
Yeah, that's a variation that allowed. Yeah.
Yeah. So what would be stopping, say, if Coinbase, Kraken all hammered the system and put loads of gas on there, so then they became the average of what they were willing to pay, which then pushes up.
Yeah, so you should read the paper. So
because I thought that's the idea of EIP 1559, right? To stop that from happening.
Yeah, so there are some mechanisms that are there. There's a rebalancing that's actually happening. So there is this question that's being asked is literally what you're kind of asking. Is it 1.5? Is it 2? So if you look at 2, there are a bunch of attacks that can actually bring the whole thing down. So 1.5 is something in the middle. So, if they really, pull the whole thing, push the queue up and then fill it in, then there is nothing we can do now because nothing we can do then, right? But we can actually do other mechanisms by which, if you so require, and this is the attack that's happening, you could actually differentially price things. I don't think that's actually has gone into the EIP 1559.
Right.
So the problem was, if you were to look at the two implementations that were there, one was MetaMask, and the other one, I can't remember what it was. It was an optimistic one. It has nothing to do with reality. When you want to put in a transaction, what is happening is what you're being proposed is a random thing that, MetaMask was thinking. And that's not really what it is. And the delta between what you pay and what you are supposed to pay is not given back to you. It's taken by the miners. So one of the key things that's being said in EIP 1559 is like, if I pay gas for transaction fee, if my transaction goes through at 150 instead of 200, my delta of 50 has to be given back to me. That was one of the things that we're really upset with.
Right.
So, and from what I understand, is it that a lot of the miners aren't too happy about the proposal anyway? So if that's the case, we could end up with a fork going on? That's possible, I guess.
I'm sorry, I didn't understand what you said. Apologies.
So I got the impression that the miners were not supportive of the proposal because it reduces the mining fee, and so if they reject it, they reject it because they are part of the network. Then you would end up with a fork taking place.
I mean, you should probably understand the economics of this game, right? So the economics of the game is this. So think of mining as a European call option. Who here is like a traditional finance person?
Yeah, I think we can probably...
Okay, all right. Okay, all right. You know what a call option is, right?
Yeah, just don't start getting beyond vanilla swaps and this kind of thing.
Yeah. Okay, fine. All right. So, you have already put in your money and you bought the hardware. So you are done. Okay. If you go do a fork, and even if you keep it, you are running the risk of only having a fractional value capture, right? Now, your best strategy in this essence is to stay and put up with EIP 1559. So that is part of the reason why I don't think, if they're all rational and if they're all locked into hardware. And there is one other thing that has happened. There's a very important thing that has happened. There is no silica available. Okay. So that is a very, very interesting situation. You can't buy a GPU. For love or guns or bullets, you can't buy a GPU. Okay. Not on the market. So no 3090s, no 3080s. What has happened is, in China, people have started buying laptops and taking out GPUs out of laptops. So it makes sense to buy laptops with GPUs to run mining. Okay. So if you have done all of that, and now you're seeing you have no ability to go create a whole network with enough of mining power, and your chances of segregating the network is small, and there are a lot of ETH that's being staked in Net 2.0, and all the DeFi is sat there. There is already BSC, really trying to drain on this side. It'll be really stupid of you, because BSC ecosystem, you have no existence of miners, right? So you'll be completely F-starred the moment you leave. So your choice is like, you take what you have, it's a reasonably fair thing, or you get F'd. So I doubt they will ever fork, unless they're completely stupid.
Stick with the main investment and the main party then. Okay, that's fair enough. Matt, that was, I think, a very scenic journey around an awful lot of things right there.
That was very useful. There's a lot. I mean, I have a lot to learn. So this is fantastic.
Yeah. Well, what I found when I first came into this space a number of years ago, and what kind of drew me to this space was, first of all, when I realized that blockchain is actually a protocol, and that's all it is. And protocols are awesome because they're really boring, so people get bored of them, but they're game changing. But the other thing that I discovered is that most people, when they're talking about them, get way, way too complicated. And so I found I used to go to a lot of these events, and I'd understand about 10% of what was being talked about. And then the next event, I'd understand 20%, and then the next event, 30%. So you kind of get there, and like Mark's nodding as well there. Like it tends to be, certainly in the blockchain world, a little bit in the crypto world, that you just build your knowledge bit by bit, and it's more through osmosis and diffusion than just picking up a book of the A to Z of blockchain kind of thing. So hopefully we'll get there. So
I don't think there are any books that actually contains A to Z. This is the biggest problem. So I among other things, for my past sins, teach various courses in universities. So I've taught at MIT, and I have 2 academic positions. So when I want to teach, I give them a reading list of papers, because all the books, I have most of them here, they are not even, okay, when there was a real scarcity of toilet rolls, I was, suggesting to people, find blockchain books.
I'll tell you, Matt, the one that I did find useful, and Anish may disagree with this, is that Antonio Antonopoulos runs a Introduction to Digital Currencies MOOC, so a massive online course. They run it about every 3 months, and it's free. And it's about, I think it's a 12-week course or something. And it goes into this stuff in quite detail about things like mining, proof of work, proof of stake, wallets, the whole thing. But it is about the blockchain technology and how it's used. I found that invaluable.
I mean, I haven't taken the course for obvious reasons. And I looked at the contents of it. I think it's probably very out of date now. So, it is like, at the pace at which things are progressing, it'll be incredibly hard to create a curriculum. So if you really want to understand like technology, okay, I will give you a very simple, my view of this thing. So you could think of 3 generations. So I worked on 3-generation blockchains. Ripple is the first generation, Bitcoin and Ripple. No smart contracts, just blockchain. Second generation Ethereum, you have smart contracts, right? Third generation is your scaling mechanism, sharding and things like that. I designed one, and a couple I can't reveal. Okay, so that's the thing. So mostly everybody runs a course. You do generation 1 and generation 2. What has actually happened is you've gone beyond 3, and then the whole stack of DeFi has happened, right? And you can't really cover any of those things. So if you're really interested in understanding from a historical perspective, most likely that's how.
Oh, I didn't mute you. You went on mute by yourself. No problem. Easy. That was not me pressing the executive button.
No.
Oh,
yes, he didn't press the mute button. He allows us, everybody, to have our opinion.
And sure, we'll move on in a minute, because I'm conscious that time is pushing now. Well, I just wanted to check, because you were talking about the level 3 blockchains, you're mentioning sharding. Is there any blockchains that are actually using sharding yet? Yeah,
there are quite a few.
Uh-huh.
There was one I designed like a while ago. I don't know where they are right now. It's called DevIO. That's not a traditional architecture in that sense. They actually had 2 layers and a bunch of sharding in between. Okay. So yeah.
And probably for Matt's benefit, and apologies if you know this already or if any of the others do, sharding is effectively the concept that some of the original blockchain designs involved an entire copy of the entire history of every single transaction being copied to a node before it actually processes things. Whereas sharding is actually, how can you slice that up in some way? So, does every node need every single transaction in order to contribute? So you get sharding where it's like either historical, so you kind of like archive off the older stuff, or sharding where you segregate it into different areas in some way. So it's just a more efficient way of holding data. And at least Anish wasn't jumping up and down saying, no, that's a load of rubbish. So I probably wasn't too far away. We've got 10 minutes left. It's one of these things, time always flies on this kind of thing. I don't know if anyone's got any particular questions or any comments or anything. Derek, with you being new today, have you come along with any expectations of this session?
No, I came across you through the Crypto AM Telegram channel, and thought I would come in and see what's going on. I think every week's quite turbulent and revolutionary at the moment. So
on the blockchain side as well. On the blockchain side as well, there's probably going to be quite a bit of news coming out because you've got the AIBC summit in Dubai. So that's the AI and blockchain, I think is what it's called, summit in Dubai. So James Bowater, who runs Crypto AM, in fact, he's out there at the moment. And I know that there's a few Bitcoin maximalists like Tony Vase is out there, and there's a whole conference on this week. So you've probably seen Jorge's announcements about the VIP club on the yacht and that kind of thing. So I expect there to be a few announcements about some interesting blockchain projects, as well as the crypto, as well as NFT.
Did you get a VIP invite, Gary?
What was that?
Did you get a VIP invite?
I did.
Oh, wow.
But they wouldn't pay for me to go.
Oh.
So I turned it down.
Did you say Dubai? Is that on the green list or is it on the amber list?
It's on. I don't think there's anywhere worth going to which is on the green list. Yeah. I think unless you want to go to Tristan da Cunha or the Falklands or some other place where you have to get a map out to find out where it is.
I thought Malta was on the green list. There's a few things going on down there.
Yeah, and in fact, Malta's really active in the blockchain space as well, because they did VFA, which is the Virtual Finance Assets Act. They've been very proactive in the blockchain space and the crypto space. But yeah, I think that Dubai's on the amber list because I was looking at getting myself a letter to go out there, because you're allowed to go out there on business, but not on leisure. I think was the rule. So, but it could all change. I know a few people who flew out there this weekend, and I'm going to laugh my head off if they're not allowed back into the country again. So, and James could be one of them. So, if he's watching this video, hope you make it back, James. Yeah. Okay, well, we've got a few more minutes. So, any other thoughts or comments from anybody this evening?
I have a question. Maybe Gary, you or Anish could comment on this. I've gotten in a couple of discussions about crypto, and I mean, I wouldn't. Some people say I'm anti-crypto. I'm not anti-crypto. I'm more of a crypto, maybe crypto critic about the sheer volume of assets that have flowed into cryptocurrencies. I just think is mind-boggling. And in many ways, I think that there's a lot of parallels between what's happening in cryptocurrencies now and 20 years ago in the dot-com bubble. But one of the things I'm always curious and I like to bring up is, why isn't there essentially an arbitrage relationship between Bitcoin and Bitcoin Cash? You could argue Bitcoin Cash is a superior coin because it has more functionality, more utility than Bitcoin does, but one is 53 times the price of the other. What are the thoughts on that as a crypto newbie?
My question to you would be, apologies if anybody is very religious. Imagine you take, say, two sects of Islam or two sects of Christianity and asking that arbitrage question. There is nothing in crypto other than a large amount of speculation and huge amounts of egos. The technical improvements doesn't really change the numbers, and there is no positive correlation between technical improvements and value of a protocol. It's all about everything else.
Yeah, and I think it's very much, it comes back to what we said at the beginning about sentiment, that kind of thing. It's purely hype and that. So if you speak to Roger Ver, who's one of the guys behind Bitcoin Cash, and he's a real believer that you needed to change the original Bitcoin protocol to actually make it usable for like spending and that kind of thing. So I think he's right on that. But the granddaddy of crypto at the moment remains as Bitcoin, and it's simply because there are more people who use it, more people who have invested it in some way, that it is simply more popular at the moment. You could kind of have the same argument about what you're saying between Bitcoin and Bitcoin Cash as between Bitcoin and Ethereum. Ethereum, to me, is an order of magnitude more usable, more flexible, more capable than Bitcoin because it's programmable. But it comes back to Anish's point that actually the functionality and usability in this space has got nothing to do with how much it's worth. And this is where...
Gary, Yeah, I should say something, and this probably might sound counterintuitive to you. In theory, if you look at the instruction code that you have for Bitcoin script has more instructions than Ethereum. So it just to state the facts, but it doesn't have a true EVM. It is, it is more a stack rather than a queue. So you could stack it up. If you want to take the one on the bottom, you have to take everything out. A queue, you can actually say first in, first out in that sense.
Yeah, I think for Matt's point in terms of, why is one worth 20x the other one or whatever it is, it's kind of a variation on Anisha's point about the religions. It's like two football teams. It just so happens that a lot of people like Arsenal compared to, I don't really know football, so Chelsea or something like that. To me, they're all a bunch of, but both teams have got 11 players in them. Both of them are teams of men of a certain height, of a certain quality. There shouldn't really be any difference, but they are for some reason. And I think it is a lot of that it's just historically Bitcoin was the original one. And so over time, it is possible that Bitcoin Cash will keep gaining in popularity, and the arbitrage between the two of them will drop away. Which means Bitcoin Cash, and this is not a financial advice, blah, 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 carries some great potential.
Yeah, this is interesting. And this is something I've been very curious about. And I have a theory on this because I was, obviously there's two kind of camps about crypto. There's the Bitcoin should be $500,000, and then there's the other Bitcoin should be zero. And I had to say I was putting myself in the Bitcoin should be zero camp. And I was looking at this, and clearly it's not zero. And I read a very interesting article by Ben Hunt of the Epsilon Theory. And when I first time I read it, I said, what is he talking about? But the more I thought about it, I realized he's exactly right.
He went 180 degree though. You should reach. So I am one of those guys. I've been watching, and I've had an email exchange with him about this a long while ago. Yeah.
But I think his point, at least his most recent stance, that Bitcoin is art, I think is spot on. And that's why there can only ever be one Bitcoin, the same that there can only ever be one GameStop. There will never be another stock like GameStop because it represented a unique part of a movement, same like Bitcoin, where the fact that you had a GameStop position in your Robinhood account showed that you were part of a movement. And you obviously were hoping to triple your money in a couple of days, but it was more, listen, guys, like Bitcoin. I own Bitcoin. I'm part of the alliance. I'm part of the movement. So it's art, and it represents your vote in a movement. I mean that's my theory about it. But
I think in some ways it ties in with what we were alluding to. It's effectively tribalism, and it's got value because it's a big enough tribe.
I think you should actually go read Noel Harari, and I normally describe this to people, but I was keeping my mouth shut. Now that everybody said it, I'm going to say it obvious. All blockchains are religions. There is delayed gratification. If you want to get into a blockchain, imagine I was talking to you about mining. That is complete case of delayed gratification. You buy hardware with the belief you'll be, compensated for putting the hardware on. That is mining is one. Any developer is again delayed gratification. They put in their time, they learn lay the code in that particular programming language, understand the ecosystem. They will only be compensated when they are able to produce production level code, right? So this is all about belief system. So I believe every religion has a prophet of some kind, a bunch of apostles. Classic is Ethereum, Vitalik with a bunch of people behind him and a bunch of people around him, right? And some of the apostles broke away and created other religions. Gavin, Polkadot, Charles IOHK. So, that's how it is. If you draw a graph and look at the evolution of belief systems and religions, you will see one-to-one map.
Yeah.
I like that, Anish.
Okay, guys, we're drawing to a close. It's very nearly 6 o'clock. So I was going to close it for today. I hope you found it worthwhile dialing in. For those who haven't been on before, for those who have, thank you for sticking around and contributing in that. I always stick these up on YouTube afterwards as well for anyone who wants to rewatch anything, if there's anything to learn or anything. If anyone has any questions, feel free to ping me a note directly. Other than that, I'll wish you a good week. Be safe, go wash your hands, and have a great day.
Thanks, Gary.
Thanks, everyone.
Thanks,
Okay.
Gary.
Thank you, Gary. Bye-bye.